All right, so let's just go over a few things that I'll just go ahead and like talk about them here on a monologue instead of having like an open session. But basically, I just want to show you a few things I've been looking at this month. So starting on the 19th, I'll be just so you know, I'll be Monday through Friday in the mornings trading, and then the first half of this month I'll still be Tuesday, Thursday, but that's really kind of messed with me. I think honestly, only having those 2 days, because I'm wanting to be more active in the markets, and it's tough because like my schedule just doesn't allow me to. So I'm making some changes there, and then it should be better second half of this month. But anyhow, let's get into. Let's just look at like Friday's trade because it's most like fresh in my head. Let me zoom this back out to here. Give me that previous day. So we have Asia open low off the 50% of the wick, which is that green candle, and it's the 50% of the daily candle, which would be this one here. Okay, this daily candle, 50% of the wick. Kind of supporting that. And then we have a nice buy model here overnight in the London session. It's really nice, honestly. Like we open at 2. We have some reversals below that take us back up. As you can see, like all 3 of these go back up to the opening price. Okay, all pretty nice reversals there. But this one here in a macro, so 445 to 515, nice reversal. Swept 30-minute cycle low here and rallied all the way up to 2 a.m. And then honestly, like if you caught that low, you could have held it all day. But same thing happens here at 6. We drop below 6 a.m., form a nice little reversal, and then rally up. But I think, me personally, I need to get back to the model specifically, having like the H4 opening price, having a 30-minute cycle sweep, just being patient and waiting on that because I've been a little impatient this month. And my, it's reflected in my trading and all that. So, all right, so let's look here. The trade for Friday was this. So we had the low resistance liquidity form. So lower high, lower high, lower high, lower high. I'm bullish. I was targeting this buy side liquidity up here. And so basically we drop down, take a 30-minute cycle low, but we're above 6 a.m. So this is more of the continuation side of it, of the model. Or if you look at the 9 a.m. open, it's right here. So you can still frame it pretty well based on the 9 a.m. We open low and then kind of get into that wick of the 9 a.m. candle. But we have a nice support level here with the new week opening gap. So that's something to note as well. As we were bouncing here off the new week opening gap, we were also bouncing off a previous day's high, being the news high. So this was the previous high of the month here, April 2nd. Okay, it comes across basically right at the new week opening gap, but not quite. And we were using that as support as well, which was an important high because we spiked on that news and then sold off the whole month, and then we got back above it the other day, dropped back below, then we got back above it again and used it as support. Okay, so we have that level as support. And we also have a few other levels on the daily chart that I will definitely talk to you guys about. It's something that I learned this week, actually. It's not I'm not so sure about it yet, but I'll talk to you about it after we review a few things. So anyway, the trade here, we drop low. And what I want you to see here, honestly, is the 10-minute cycle. So we have the 10-minute cycles. I don't need to mark them out for you, but 9:30 to 9:40, we have the low. Okay, we took that, and then 9:40 to 9:50, we have this low, and we took that. Okay, so we swept both 10-minute cycle lows, and then we changed the delivery here. Okay, on the 1 minute, it was super clean. Inversion gap down in here. Inversion here, closed above. I mean, that's really clean at a support level. Took liquidity, and then so I was like, okay, it's not exactly with the model, but it's in a macro. I'm bullish. I'm seeing other things, and previous cycle low here as well. So let's just like minimize it a bit, but previous cycle low, 10-minute cycle low. We held it nice on the retracement into a fair value gap, and we also had a turtle soup down here on the 15-second. So once this closed above on the 1 minute, I was like, okay, I'm gonna wait for a retracement and then try and take it long, and that's what I did. So we zoom in here, and then it shows the perfect, like picture perfect 15-second model. We retrace, we're in that fair value gap, supporting prior cycle low, and then we have a low, take that low, and then do another CSD. And this is a great little entry model, honestly. Like, I was using this a lot this month in April, and it's pretty good. It's really good. You wait for the 1 minute confirmation, and then you wait on the first pullback. This one is ideal because it drops down back under the CSD and still gives you a good risk reward. But you have the turtle soup here, okay? So it needs a low, and then take that low. So you want to have it descend as well. So if you're bullish, you want to have price come back down, make a low, take that low, and then CSD again, and then take off. So that we have that here, CSD, fair value gap. I think I entered on this candle here, but it held the gap well and then took off. And this was the 10 a.m. open. At the 10 a.m., I entered before 10 a.m., which I usually don't, but 10 a.m. opened, held that gap, and then rallied. And honestly, like, pretty perfect delivery up to this cycle high, completing the buy model. I just was greedy here, being a Friday. I was greedy, but also, I was greedy but stingy at the same time. Like, I was greedy. I wanted to hold until this buy side liquidity, but then like I didn't want to give back any of the trades, so I put my stop way too tight. I ended up putting my stop below this low here. Once we dipped and ran higher here, we were at the end of the macro, and I was like, okay, I'm gonna put my stop there. I don't want to lose any money. Ended up making money there, but what did it do? It comes back, stops me out, and then just kind of consolidates for a bit, and then finally hits the buy side liquidity. The actual stop should have been down below the breakaway gap, which is what I told you guys in the chat, but I didn't even listen to myself. So either there on the breakaway gap or here on that low, underneath that low, because it taps into the breakaway gap. So you can do either one of those. Which brings me to a point that we need to talk about breakaway gaps. Not just a fair value gap, but a breakaway gap. And what I want to reiterate with these, I don't know if you guys know what these are yet, actually. But I was in the ICT stuff, and I started to really use it this month and look at it because I don't know, I just it came into my head, and I was like, let me just like focus on breakaway gaps and like see how it is, rather than just like slapping a fair value gap there. But there are specific criteria. So basically what it is when you have the change in the state of delivery, so this is the first one, okay, that's the first change in the state of delivery, and this is going to be in a buy model or a sell model. You have to have like the narrative in line. So let me get this. So you have your first change in the state of delivery, and then you retrace, and then this is where the breakaway gap comes in. So this is a fair value gap, normal fair value gap, BISI, whatever, blah, blah, blah. Nothing else. Okay, right there. This one is a breakaway gap because we've done this, because we've made a CSD, we've retraced, and then we've made another CSD, or not another CSD, but we've made a CSD, retraced, and then blasted through that high. Okay. If we come through the second high with a gap, that gap is a breakaway gap. And so what that means is you don't want price to come back and violate that gap. And it most likely remains unfilled. Okay, so you really don't want to see price action down in the lower half of this gap. It can wick down in it, blah, 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 it can, but this is the main thing that you see in a breakaway gap. A small wick into it, or it remains open completely. Or price can dip in once, twice, whatever, but you want this bottom half to stay open, like from closures. So you don't want the candle to come down and close. Maybe it comes down and wicks. Maybe it comes down and wicks and wicks and wicks. But if it comes down and closes in that gap, that's not a breakaway gap. It's just not functioning as one. It's like you've misread it, or it's just an all around bad read. But the criteria is change in the state of delivery, retrace, and then once you break that second high, if there's a gap that broke that high, so see how the gap breaks that high here? That's the breakaway gap. Okay. And you can look up ICT's video. Just like go to his YouTube page and type in breakaway gap, or like his Twitter and type in breakaway gap, and you can dig a little bit, and like he has a specific video that goes over the breakaway gap, but that's essentially it. You have a high, CSD, he calls it a market structure shift, and then you break the second one. So anyway, that's that trade. It kind of rambled on there, but I think that's important for you guys to know. And let's look at this one here. So this is Thursday. Really nice trade, actually. I just, I wasn't here to see this, but 10 a.m. opens. We run up higher. It's a decent little model here. We're above a 30-minute cycle high, above new week opening gap. The only thing here is we don't have a inversion fair value gap, which is okay. But what I wanted to show you on this trade, not this trade, I didn't take this trade, but what I wanted to show you on this setup is this. So say you're not comfortable taking that right at the CSD. Zoom into the 15-second, and here's that little 15-second model again. Okay, so we've done the CSD here, and now I'm thinking I want to sell, but how do I sell? High, low, take that high. Okay, now what do I need to sell? I need to close down below this candle. Okay, so I need to close down below this candle. Okay, it's like a breaker almost, you know what I mean? We don't get it, so we make a new high. Okay, we make this new high here. And I need to close down below a bearish candle. Okay, then I can get in. So it occurs. Okay, we make that new high. We close down below this one. Okay, you can either do the wick, you can do the body. It's up to you. Obviously, wick is like stronger, but if you want to go on the body close, you can as well. And then you're going to go short either here, stop right on that high, or just a tick above. Keeps you low risk. If you want to push it up here, that's fine. You can, because what happens sometimes is you'll have it kind of do a fake out, like it'll come up here. Ooh, that gave me the nice entry. Then maybe it makes one more, and then it'll do it again. You know what I mean? Because it is a 15-second. You are going to have more losses on that than a 1 minute chart. So, if the stop really bothers you being that far, just pin it there. And then if you get the delivery again, like say it comes up and nicks that high, takes you out, and then does it again, just get in again. Like you lost a little bit of money. That's 12 points. It's not a big deal. And just get in again. Or put your stop above the 1 minute high or somewhere just a little higher to give it some space. Find a PD array above, like this little wick into that fair value gap. Put your stop above here and give it like 20 points of room there. This is where you just have to be a trader, like everybody wants those super hard strict rules, and they're good and they help. But sometimes you have to be a trader and like make a trade, and just kind of improvise. So that would be the entry. Stop here, and then whatever. It's your sell model. Take profit wherever you want. Obviously, like down here at the 10 a.m. would be ideal, but anywhere along the way. 9:30 opens, always a great spot to take the profit. Okay, I think I've made that 15-second entry clear. What else? What else have I been doing? So like around the open, I've been doing some funny stuff. So let me just show you an example maybe here. So I've been trying to like maybe take a few trades here at the open if it looks all right, but basically what I would look for is if I get the complete model, that's great, but what I'm really looking at the open is the 1 minute chart and just waiting for something to change the state of delivery. So, this would be it. You could say that one, you could say that one. What I really like to see at the open is a full closure below the full candle. So like here, I'm not going to consider that a CSD unless it closes above this wick. Bearish, I'm not going to consider that a CSD unless it closes below this wick. Okay, and then I'll like short that retracement. Same as here, not until up here with this 945 candle closure. Same as here at 945, we have this closure here. So now I'm bearish, but I don't recommend that, honestly. Like I didn't have that much success. I caught a few nice trades, don't get me wrong, like there were some really nice ones, but all in all, it's probably just best to wait for the model, because what happens is what, we take this high, 945, 30-minute liquidity, CSD, drop down to the 15-second, and then you get a little retest of that and go short, or You go short down here, blah, blah, blah. And you can take it lower. What else? 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 I did see this a few times throughout the month with the failure swings. So you'll have a low, and then you'll fail to make a new low, and then you'll have a CSD. Okay, when that candle closes over the next one. And let's look at the 15-minute chart. So I did use the 15-minute chart a bit this month as well. But it's late. Like you really don't get the nice entries in the wick on the 15-minute. It's more or less just like a look back pre-market just to see where you're at. You know, just to see how price is reacting. Like here, you know, we have the CSD here on the 15-minute. So you'd be kind of bullish up through here, and then around 6 a.m. another CSD here. 7 a.m. opens up, gets above 6 a.m. and drops and sells off. So like, you know, if you're wanting to trade pre-New York, you can kind of use the 15-minute and guide you there. But really, once New York happens, the 15-minute almost becomes too big. Like we have the CSD here, but then you have like a 200-point range. But it does help to glance at that every once in a while just to make sure, you know, you're not just completely going against the momentum. You know what I mean? Like if you have this occur, we dip into that gap and then we close here. You really don't want to be shorting any of this up here until you get a nice reversal, because this is all so bullish. And, you know, our model might open up at 10 a.m., you know what I mean? And we're above price. We're above the opening price here at 10 a.m. and where I'm like, oh, the model says we need to short. But like, sometimes you have to know where you're at on the higher time frame. Like we dipped into that and we rallied out. 15 seconds super bullish. 15 minutes super bullish. Like you don't really want to short any of this or even think about it. Just try and get a continuation long, because we're just closing bullish, changing the state of delivery bullish every time. There's no bearish like CSD here. Maybe here would be considered one, but it's not. It just fakes them out and then it takes it long. That's in the afternoon anyway. What else? That's pretty much it. So let me show you this one thing I learned from Trader Sumo. I don't know how good it is yet. I mean, he's good. He trades well, but let me just show you on the micro because it's kind of blank. So what he does is he'll use these levels here. So daily opens and closes. So like he'll use a swing point. I don't know if he only uses swing points, but let's just say we're going to use swing points. So a low, a high, and a low. So this candle formed a swing. I'm going to mark out that level. Blah, blah, blah. We formed a swing. Nice. Okay, we formed a swing. And maybe we can use those levels in the future. In the future. So let's go into the daily. That one formed a swing. And then like just with those levels, let's just like look and see what price does. Like well, I don't think we have enough data there actually. So let me go into the daily. And then mark a swing. mark a swing. That's actually a swing to here. Here. So I'm not going to really mark the current week because this is used in the past. So like you can't really use these swing points until they are an actual swing. So you need 3 candles. So basically like we would use all the left side of the chart if you're looking at a higher time frame. And basically what he'll do, he has much more levels than this, but maybe we'll stick to the daily and the weekly. You can plot them out, and then like you can use them as key levels or support and resistance or whatever, you know. And it works pretty good. Like, you know, if you look here, we bounce around these levels, bounce around. This one comes down into it, gets a nice rally, get above it, come back and test it, come up to this one. We get up to that level, bounce back down, test it, come back down to this level. I mean, it kind of just bounces around level to level. I tried using it on like the lower time frames, you know what I mean? So if we just look at a live trade here or whatever, or like a live session, like it's trend following. Okay, so you're gonna want to, you make the high and you make another high and you come back. So basically you want to see that hold price. So that level there, you want to have that hold price because we've made a low, made a high. That's the trend. We want to hold price there to make a new high. And then this swing low here would be the next level. So if we break here, we're probably coming here. Same thing. If we break here, we're probably coming here. And then you can kind of use it on the way up too. But yeah. Anyway, I'll let you guys look into that more. I know that was a terrible explanation, but we'll talk soon.